Even after the 75% drop in the stock market crash this year, this tech stock is still up 245% in just 3 years, and investors were up 12 times their money from the IPO till last year. Now, unlike a lot of those other pandemic stocks though, this company is profitable and booking sales growth that can take it back to that all-time high for a 300% return, and it's just one of the tech stocks I'll highlight in this video. Hey Bowtie Nation, Joseph Hogue here with the 5th in our Just One Stock series. If you could only invest in one stock across different themes, which should it be? We're going to cover all the strategies here, from value to growth, dividends, and by the end of this series, you'll have a portfolio of the very best stocks to buy. So join the community and watch for those. And Nation, I am excited for today's video because there are no better stocks than tech to get you to your financial goals fast. You know, we all love us some dividend stocks here on the channel, but we also want those Lamborghinis in the driveway. Now, you could invest in a safe dividend stock like Coca-Cola, investing $1,000 and hoping for a miracle, but it would have taken 51 years to turn that into your little green machine. Pick the right tech stock though, and you're racing around the corners in half the time. Amazon would have turned just $1,000 into 270 grand in 20 years. Following these fast-paced tech stocks means staying on top of the news, so I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news and trends you need to know. Each week before the market opens, I'll show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for that sign up link below. I'll start with 4 tech stocks to watch, 4 runners up that almost made that top spot and could produce even higher returns. I'll also show you what I'm looking for in these so you can make your own decision and then reveal that best tech stock to buy right now. Our first tech stock is also the newest in the group with its IPO 3 years ago, Datadog Inc., ticker DDOG. And the company is an IT services provider monitoring all the data generated by a business and then analyzing that for security, management, and efficiency. And from a unified platform focus in 2010 to a multi-product cloud monitoring system today, this is the kind of innovation that we're going to talk about when I detail what I'm looking for in a great tech stock. The company has historically spent upwards of 40% of its sales on research and development and other capital investments, helping to drive that constant innovation. Being able to cross-sell its 20,000 customers into different products makes them extremely sticky. More than 4 in 5 customers use at least 2 products, and a third use 4 or more. That's helped sales grow at a 39% annual pace over the last 3 years, while the company also gets more profitable, improving the operating margin to 0.34% from -5% in 2019 because it costs less to keep a customer than finding new ones. Revenue is expected higher by almost 58% this year to $1.6 billion, which means the shares are still trading pretty expensively at 21 times on that price to sales basis. That's something you'll notice about these fast-growing tech stocks. You're gonna pay for that growth. The average analyst target of $155 would be a 42% return from here, and even that low target is above the current share price, but I wouldn't mind watching this one for a while to see if that price comes down for a little better value. And we're just getting started, but I want to get your input on this as well. Watch through the video and let me know which of these tech stocks do you like best. Are there any of these runner-ups that should have made the #1 spot? So scroll down and let me know in the comments, which do you like best and why? From the newest stock to one of the oldest tech stocks in the list, with Intuit, ticker INTU, around since 1993. Now, I was gonna make a joke about that, but couldn't think of one that didn't sound condescending to the younger investors or make me feel really old, so let's just pretend I said something funny and move on. Intuit is the powerhouse behind the QuickBooks accounting software for small business and the DIY TurboTax solution for individuals. With an estimated 80% of US small business owners using QuickBooks, the company just dominates the market, and a retention rate of 79% means it doesn't fight that churn that other companies struggle with. Now, why I think Intuit is one to watch over the next few years is because it's building a massive user base through its acquisitions and just beginning to cross-sell across the platforms. Onto its 56 million TurboTax users and 8 million QuickBooks users, it's adding mail delivery platform MailChimp's 13 million users and a staggering 121 million Credit Karma users. Intuit is transitioning into a cloud-first software model, which is going to give it mountains of customer data that it can use to cross-sell those products and extend its reach. Top this off with a growth in small business filings from all the new work-from-home freelancers, and revenue growth is surging. Revenue grew at a 10% pace over the last 3 years, but are expected 31% higher this year to $12.7 billion. Now, that still means the stock is a little pricey here at 10 times on that price to sales basis, which is why this one didn't make it closer to that top spot. But analysts have an average target of $527 for the share. and 40% higher to the high target. Now, I know a lot of you out there just want a list of stocks to buy, but I can't do that. I'm not about just telling you what stocks to buy because, like so many other channels out there want, that just keeps you dependent on some Yahoo to make your decisions for you. So we will get back to our list, but give me 2 minutes just to talk you through what I'm looking for in these tech stocks, because I promise this will make you a better investor. And this is going to start like we would with any stock, with that revenue growth and the operating margin that sets a company apart. More than just a high rate of sales growth versus competitors or higher profitability in that operating margin, this is the best way to find those companies that have some kind of competitive advantage. And nation, most of us don't come from the tech industry or have the experience in this sort of stuff that's going to help us know which companies have the most innovative products. And that means if you can't spend the time to become an expert in that technology, then you need to find some other ways of spotting those advantages that make one company grow beyond its peers. Another way of finding those competitive advantages is by tracking how much the company spends on its research and development or other capital expenditures as a percentage of revenue. And this is really important for these companies because they have to constantly be innovating to stay ahead. You find how much a company is spending on its R&D under the operating expenses on the income statement. And this is all going to be free on Yahoo Finance. And you want to take that number divided by revenue. So you see here that Datadog spent $419 million last year in R&D, or about 40% of its sales. That kind of an aggressive budget for innovating is what made Intel the leader in semiconductors for so many years. But then things started to slip, and that was the first warning sign for investors. After the dot-com bubble burst, Intel started spending less on its R&D, which means it fell behind competitors and has never been able to take back that momentum. Back to our list of tech stocks though, and another older company but with amazing growth, Advanced Micro Devices, ticker AMD. Between 5G, artificial intelligence, Internet of Things, and gaming, the demand for semiconductors is making it one of the fastest growing industries, and AMD estimates the addressable market at $135 billion. AMD really picked up the ball when Intel lost that innovation edge and has never looked back. A bug in Intel's newest data center processor allowed AMD to double its own data center revenue over the last year, and is rolling out both the Zen 4 architecture and the world's first 5nm processor core later this year. And that kind of innovation is driving revenue growth of 36% over the last 3 years and expected to hit 60% this year to $26 billion. Now, the company does do a third of its revenue from PC and laptop processors, so it's struggling with the slowdown, and shares are down 33% since November on that, but this is a solid long-term growth story. Now, top that off with a valuation story as well, with shares trading for just 6.4 times sales compared to something like an Nvidia, which is trading at 16 times price to sales. And you see how analysts get so bullish on the stock with an average target of $123 per share. Next on our tech stock list is one I haven't covered before, HubSpot Inc., ticker HUBS. HubSpot operates a customer relationship management platform with 143,000 clients across marketing, sales, customer management, and operations. And while I do like Salesforce, ticker CRM, in the industry, they don't do as well targeting the mid and the small business market, which is where HubSpot really dominates and uses the freemium model to attract new customers. Revenue has grown at a 41% pace since 2014, with 56% growth in the international segment. Analysts are expecting 32% sales growth this year to $1.7 billion for about 9.8 times on that price to sales basis, which is more expensive than Salesforce at 6.1 times sales, but then again, Salesforce is only growing at a 20% annual pace. Analysts see a 26% upside to the average target of $438 a share and 58% to the highest target on the stock. I'll reveal that best tech stock to buy next, but I want you to think back over the last 6 months, and it hasn't all been rainbows and unicorns, right? Tech stocks in the NASDAQ here in red plunged 30% in just 6 months, and even the broader stock market, that S&P 500 here in yellow, fell into a bear market of 20% lower. Now, I want to buy that Lambo just as soon as possible as well, but if there's one thing we've learned this year, it can't all be those high return tech stocks. If you've panicked and sold a stock after the price fell, then you know how important it is to have at least a few other stocks to smooth out your portfolio. And the perfect example of this is my favorite blue chip stock, up 605% over the last 20 years. So still a very solid return, but also only down 7% in the first half. So giving you that sleep at night protection for your money. Now, I want to get to that number one tech stock to buy, but I'm going to link to that blue chip stock video below if you want to find out what that was. And the top tech stock to buy right now, shares of Cloudflare, ticker NET, for its unique advantage and growth over its peers. The company offers security, networking, and application services across a cloud platform, which really makes it unique in being able to do all three and kind of a next generation to some of the legacy companies like Cisco, Juniper Networks, and Checkpoint Software. Cloudflare already has more than 10% of the global internet traffic going through its network because it has that unique advantage for security and faster delivery. Basically, it's serving traffic through infrastructure in 250 cities around the world, so it's closer to those points of origin. It's a big advantage in speed and efficiency. The company has plans to grow its addressable market by 17% through object storage and networking services through 2024, along with a higher market share of its existing services, all to maintain that 51% annual growth rate since 2016. It's expected to hit $958 million in revenue this year, so quite a bit smaller than some of the tech companies in our list, but really just dominating its market. Cloudflare targets 18 to 20% of its revenue for research and development, which is going to help it keep that competitive edge and the growth. Shares are down 74% from the November peak, and analysts don't see it back there anytime soon, but just that $89 average price target is 55% higher from here, and I think a return to the peak of $220 a share could just be a few years away. Click on the video to the right to see which blue chip stock was up 605% and beating the market over the last 2 decades. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.